The 2019 and 2020 new coronavirus outbreak, coined COVID-19 pandemic, have had major implications on human life globally. It has isolated people, brought forward and justified new emergency measures, locked down economies, and unemployed millions. But like any other major event, it is crucial to study financial aspects of such an event, i.e., following the money. Trends and decisions of major financial institutes such as the World Bank and Europe Central Bank (ECB) sometimes anticipate and sometimes illuminate these events. In this video, I will look to one such a decision issuing $500 million pandemic bonds by the World Bank, who then decided to leave it off the shelf. I will also look to the $1 billion pandemic bond issuance by Bank of America, as well as 750 billion euro PEPP, Pandemic Emergency Purchasing Program, by the ECB, European Central Bank. This is looking to a so-called infectious contagious disease from a rare point of view, from financial securities such as bonds and swaps angle. So after all, what is a pandemic bond? We will have a very quick definition of a bond and of a pandemic. A bond is a form of debt, and they promise to pay you back in full with regular interest payments. There are some elements to every and each bond, including face value, coupon rate, and maturity date. And a pandemic is obviously comprised of two Greek words. Pan means all and demos means people. It's an epidemic of disease that has spread across a large region. Now, to study the pandemic bonds, we have to start from insured or insurance-linked security, ILS. That's the financial securities that are linked to pre-specified events or insurance-related risks. And that pre-specific event can be a pandemic. Under the ILS, we have catastrophe bonds, or CATs, C-A-T. They are used by property and casualty insurers as well as reinsurance companies to transfer risk to investors. First marketed in the 1990s, they offer insurance and reinsurance companies another way of offsetting the risk associated with underwriting policies. And now, under the CATs, we have the Pandemic Emergency Financing Facility, or PEPP. And under the PEPP, we have the pandemic bonds. So, now we come to the World Bank, IBRD and IDE, which are two subgroups of the World Bank. When the 2014 Ebola crisis breakout happened, it was proved that, and it highlighted the difficulty in rapidly mobilizing funding from the international community to contain a pandemic outbreak. To address this challenge, the Pandemic Emergency Financing Facility, PEPP, housed at the World Bank, was launched in 2016 to provide an additional source of financing to the world's poorest countries. This was the start, and as you can see, a very general structure for the PEPP here, and a few quick points. As just mentioned, they were started in May of 2016 at the G7. They were supposed to quickly channel funding to countries facing a major disease outbreak with pandemic potential, and they combine fundings from the bonds issued today with over-the-counter OTC derivatives. Transfers pandemic outbreak risk to derivative counterparties. Now there are two windows. One of them is the insurance window and the other is the cash window. Under the cash window, which was established by Germany with offering 50 million euros, they are for the containment of disease that may not be eligible for funding under the insurance window, which I will explain very soon. Under the insurance window, we have premiums funded by Japan and Germany consisting of bonds and swaps. Okay, please pay attention to the dates in this presentation. This is the 28th of June 2017. World Bank launches first ever pandemic bonds to support 500 million pandemic emergency financing facility. And this was in 2017. So this marks the first time that World Bank bonds are being used to finance efforts against infectious diseases, and the first time that pandemic risk in low-income countries is being transferred to the financial market. Now, there are here some Q&As for further understanding. What is the PEP's financial structure? Already explained. Role of cash window, and has it been used? Yes, it has been used. The PEP has paid out $61.4 million from its cash window to fight the 9th and 10th Ebola outbreaks in the Democratic Republic of Congo in 2018 and 2019. Although there are a lot of criticism to this, which we will check later. And then, what is the role of PEP insurance window? It says that it works like any other insurance. It buys protection against a worst-case scenario, in this case against rapidly growing cross-border disease outbreaks. And it also includes some NGOs like WHO, UNICEF, UNFPA, which is the Population Fund, FAO, WVP, World Food Program, and IFRC, which is basically the Red Cross. And have responding agencies ever received funds from PEP? Yes, and even in 2019 in Congo, upon request from DRC government, the funds were transferred directly from PEP to WHO and UNICEF to support the Ebola response. Now, regarding this 500 million PEP bonds which was issued in 2016, there were three main developers, including World Bank Treasury, Munich Re, and Swiss Re. The bonds and derivatives for the PEP's insurance window was managed by these three entities. And also there was a risk model for risk analysis that was offered by Air Worldwide. On the right side you can see it. And Air Worldwide was the sole modeler, Air Pandemic model, to provide expert risk analysis. Now, Swiss Re Capital Markets is the sole book runner, and Munich Re and GC Securities, a division of MMC. MMC is basically Marsh and McLennan, and GC Securities, as mentioned here, belongs to MMC, are also co-managers. So here we have Swiss Re and Munich Re, which are the reinsurers, and just as the definition, a reinsurer is a company that provides financial protection to insurance companies. Reinsurers handle risks that are too large for the insurance companies to handle on their own and make it possible for insurers to obtain more business than they would otherwise be able to. And we also had a book runner, which in this case is the Swiss Re. The book runner is the primary underwriter or lead coordinator in the issuance of new equity, debt, or securities instruments. In investment banking, the book runner is the lead underwriting firm that runs or is in charge of the books. And finally, the last point, the bonds will be issued under IBRD, Capital at Risk program. So these were the people who, at the time, and I think even to this date, are the head and CEO of the entities involved. Christian Momentaler from Swiss Re, he said, build an innovative insurance vehicle to better respond to epidemic outbreaks. He's clearly talking about PEP. And then Joachim Wenning from Munich Re truly hope that the PEP will become a sustainable and integral part of a global health architecture. And Peter Hearn from Guy Carpenter, an innovative combination of catastrophe bonds and swaps. These were the points that these men architects who were involved in PEP claimed at 2016. Here, we have to understand that when this bond can be materialized, it is triggered with an outbreak, and there are certain conditions which we would go into the detail for all of them. Triggered when an outbreak crosses international borders, it considers number of deaths, the speed of the spread of the disease, and predetermined levels of contagion. The determination for the trigger are made based on publicly available data as reported by the World Health Organization (WHO). Now, countries eligible for financing under PEPP's insurance window are members of the International Development Association (IDA). The PEPP will be governed by a steering body, and WHO and World Bank serves as non-voting members. And these pandemic bonds in 2016, they were issued under two classes, Class A and Class B. You can see many of the details listed here. Now, the Class A included $225 million, Class B $95 million. But the risk for Class B was higher, and of course it had a higher bond coupon as 11% comparing to 6.5% for Class A. And other details are listed here. Of course, Class A just included flu and coronavirus, but Class B included filovirus, coronavirus, Lassa fever, Rift Valley fever, and Crimean Congo hemorrhage fever. Here are the rest of the information. Class A distribution by investor type. You can see the differences. What percentage is from endowment, asset manager, pension fund, and bond investors. And also the country's distribution by investor location. Now, there are some criteria for insurance window activation. One of them is the outbreak size, number of cases or number of deaths. Outbreak growth must be growing over a defined time period, and outbreak spread. 2 or more countries affected by the outbreak. For example, here it is describing details for flu that, for example, what certain situations have to be met, conditions. And as you will see later, these conditions were main problems which make some of these bonds totally ineffective. Now, when we go here, insurance window activation criteria for non-flu. It says at least 12 weeks have passed from the date of the start of the event. The outbreaks need to be in more than one country, with each such a country having greater than or equal to 20 confirmed deaths. Now, the condition for this to be in more than one country was one big problem which caused delay for the DRC Ebola outbreak. The growth rate needs to be greater than 0 to ensure that the outbreak is growing at a specific statistical confidence level, and the total confirmed death amount needs to be greater than or equal to 250, and so on and so on. So these criteria have to be met in order to activate these bonds. Now, there is a detailed manual from the World Bank which go into detail, and as they say, the evil is in the detail. You have to plow through all of that information to fully understand how it operates, but just some brief points here for your consideration. A total of 330 million USD of bonds and subs were sold to private investors in June 2017 with a maturity date of 15th of July 2020. And the bonds were issued in two classes, as we just explained, 225 million for Class A, 95 million for Class B. As you would see later, after the outbreak of new coronavirus, all of these $95 million were granted. And on 17 April 2020, the first payout for the PEPP bonds was triggered by the COVID-19 pandemic. And as you can see, 100% of Class B and 16.67% of Class A were spent. Now, here is the amount which was allocated to every virus. As you can see, for the coronavirus, it is 195 million US dollar. So COVID-19, as we just discussed, this was started in 2017. This PEPP, and the point is, the coronavirus which happened in 2019 and 2020 activated part of 100% of Class B and 16% of Class A. And so here is some considerable information. How much in premiums will the donors have paid for the insurance window when it matures in July 2020? Assuming no other events occur, donors will have paid 107.2 million US dollar in premiums, while the insurance window paid out 195.84 million US dollar for COVID-19. And here is interesting information regarding the countries which are going to benefit from this, with a minimum of 1 million and maximum of 15 million going to each country, and a heavier weight given to countries classified as fragile or conflict affected. And so the countries under the IDA, the International Development Association, are all free to benefit from these pandemic bonds, and the funds are granted and do not need to be repaid. Now, here is the point that the World Bank is not going to renew the PEPP insurance window after the current pandemic bond and swaps mature on July 15, 2020. We will soon see why. These pandemic bonds from the World Bank, I emphasize, from the World Bank, face a lot of criticism. The PEPP has been widely criticized for providing generous return to investors while making it too difficult to access funding during disease outbreaks, especially during the early stages of an outbreak when swift action is crucial. It was described by the former World Bank chief economist Lawrence Summers as an embarrassing mistake. Critics argued that the money spent on the PEPP could be better used for increasing surveillance, diagnostic, and response capabilities for outbreaks. And for example, this is the Lawrence H. Summers, and you can see that he said it was meant to deliver quick payouts to countries and international responders instead of waiting for international donors to act. But it did not happen. And one main reason were the conditions, the criteria which had to be met that I already showed you. Here, for example, it says that I have highlighted the important part of this full article. It says, but making the bonds attractive to investors means designing them to reduce the probability of payouts. The PEPP stipulates a payout of $45 million for Ebola if the officially confirmed death toll reaches 250, which occurred in the DRC by mid-December last year, but only if at least 20 deaths occurred in a second country. And that is one of the points which makes it complicated and inefficient, because the problem is going on, for example, in the DRC, Congo, but 20 people have to die in the second country in order to activate these bonds as a helping arm. And well, you have wait for maybe for a long time to observe this, especially, for example, in this case, the DRC is much bigger and more populous than all three countries involved in the West African outbreak. So this is another article in 13th of August 2019, as you can see the date above. And Olga Jonas says that pandemic bonds designed to fail in Ebola. She pointed out some major, for example, drawbacks. She says that these bonds were just beneficial to the investors because she says that which annually pay about 13% interest. This compensates investors for the risk that the bonds will make insurance payout to fight pandemics under certain conditions. Also, she says that when the Ebola outbreak was going on in Congo, in DRC, they had just received 31 million US dollar from the PEPP, which is not that much considerable, and also it was late. So here is another article by Wei Tan. She said that investors in World Bank's pandemic bonds face big losses due to the coronavirus outbreak. There are three key points. The World Bank bonds offer investors high interest payments in return for taking on the risk for losing a certain amount or all of their money if pandemic occur. That includes the current coronavirus pandemic. But prices of those bonds have plunged as investors flee with the number of cases surging. And you can see poorest countries finally set to get World Bank pandemic bond funds April 28, 2020. 4 months after the start of the coronavirus outbreak, financial assistance from the World Bank's pandemic bonds is about to find its way to poor countries to help them fight COVID-19. And the editorial says, World Bank's pandemic bond too late, too little, too late, needs to rethink a structure. So you can see that these pandemic bonds, these 500 million US dollar which were issued, have come under heavy criticism for inefficiency and late payouts. And when we were discussing the Ebola, yes, it was profitable to the people who to the countries that had bought the shares. But in case of COVID-19, all of the people who had invested in these bonds lost their money, because basically even after a long time it met the criteria and all of the money was granted, and the investors even lost their principal. So it should be a combination of these results that finally make the World Bank conclude that they don't want to continue these pandemic bonds. Pandemic bonds, how a World Bank financial instrument failed the world's poor. This is another article, 19th May 2020. And the interesting thing is that in a certain period of time, April 27, 2020, rationale behind insurance of Indonesia's pandemic bond. Indonesia government decided to issue a pandemic bond, of course, to collect money for the crisis that it is facing. But then, not much later, maybe just in 2 weeks, 3 weeks, on May 8, 2020, government scraps plan of issuing 13 billion worth of pandemic bonds. So Indonesia also decided to scrap the plan. We will not issue a specific bonds, including a pandemic bond or others, like it told reporters in a media briefing. BI, Bank of Indonesia, has been allowed to buy bonds through the primary market as a last resort. So we will issue bonds with a regular series instead. But the very interesting thing is, despite the fact that the World Bank and the Indonesia government decided not to go on with the plan, and actually they refrained from pandemic bonds, they withdrew, Bank of America started this pandemic bonds, as you can see in this article. Bank of America says pandemic bond proves ESG a bear market necessity. So I will define the ESG very soon, but let's first review this article. Bank of America Corp was the first on Wall Street to issue a pandemic bond. It hopes to set a trend. And you can see that this article belongs to 20th of May 2020. The bank priced a $1 billion bond offering May 14th to fund projects addressing social issues related to COVID-19. The first sale from a U.S. financial institution that explicitly links all proceeds to tackling the virus. Responses from the investors has been enthusiastic, said Karen Fung, the lady that you see her photo, the bank's global head of sustainable finance. ESG is not just a bull market luxury, ESG is a bear market necessity. And she also says that, the article goes on to say that Chinese companies have sold most of the so-called pandemic bonds, raising about 48.3 billion US dollar. Now, ESG is the environmental, social, and governing investing, refers to a class of investing that is also known as sustainable investing, umbrella term for investments that seek positive return and long-term impact on society, environment, and the performance of the business. So we have environmental, social, and governance criteria that the investor pay attention to these elements before investing the money. Because she had pointed out and spoke about ESG, I just wanted to briefly show you what does it mean. Now, when we continue to surf through the news, we see also this interesting article. So still ESG focused investors like Nuveen and Eaton Once management anticipate that more commercial banks will follow suit. So in the Wall Street and in the American financial markets, this pandemic bond has just become very alluring and interesting. You can see other lenders that have the focus and expertise to originate such loans will seek to replicate Bank of America's deal, according to Vishal Khanduja, head of investment grade portfolio management at Eaton Vance. Now this Nuveen is a TIA company. You can see who is TIA on the left. The Teachers Insurance and Annuity Association of American College Retirement Equities Fund. That's quite a name. Is a Fortune 100 financial services organization that is the leading provider of financial services in the academic, research, medical, cultural, and governmental fields. Now, Nuveen, which is a company belongs to this TIA, oversees about $1 trillion in assets, has already had discussions with underwriters from 2 banks because there is interest in similar deals, according to Stefan Liberator, head of the responsible fixed income strategy team. That's an interesting thing. They are having discussions with two underwriters to follow more pandemic bonds issuance. And now we come here to something related though different. This is a very important thing. This is a very important article. ECB, Europe Central Bank, announces 750 billion euro pandemic emergency purchasing program. So this is not a bond. This is pandemic emergency purchase program. That is something that you should keep an eye on it, because this is basically enabling ECB and the central banks in Europe who are under ECB to purchase everything which belongs to people, which belongs to companies who are in the stock market. I will show you. It is extremely important. That's the reason that I put this part also in this presentation. So this is PEPP. Now the governing council decided the following, and also I point out your attention to the date. This is 18 March 2020, to launch a new temporary asset purchase program. So we have already something in place called asset purchase program. I will show that to you as well. This is a new temporary one of private and public sector securities to counter the serious risks to the monetary policy transmission mechanism and the outlook for the euro area posed by the outbreak and escalating diffusion of the coronavirus COVID-19. This new pandemic emergency purchase program will have an overall envelope of 750 billion euros. Purchases will be conducted until the end of 2020 and will include all the asset categories eligible under the existing asset purchase program, APP. Now, this pandemic emergency purchase program is aimed to counter the serious risks to the monetary policy transmission mechanism and the outlook for the euro area posed by the coronavirus COVID-19 outbreak. And it is under the existing asset purchase program, APP. So we have to look to APP. The ECB's, Europe Central Bank's asset purchase program is a part of a package of non-standard monetary policy measures that also includes targeted longer-term refinancing operations, and which was initiated in mid-2014 to support the monetary policy transmission mechanism and provide the amount of policy accommodation needed to ensure price stability. So APP was in place since 2014, and then in 2020 they added 750 billion euros under the PEPP, posing against the coronavirus outbreak financial threats. And that is really huge. If you just look to the APP, which was in place since mid-2014, you would see that between October 2014 and December 2018, the Euro system conducted net purchases of securities under one or more of the asset purchase programs. During the net asset purchase phase, monthly purchases pace average. You can see the high amounts, for example 60 billion euro in 1 year, 80 billion euro in 1 year. They purchase a lot of stuff, bonds, assets, shares, you name it. How does the ECB asset purchase program work? You know, there is an explanation by them. You can have a look.
It is kind of easy to actually do the trade. It's just figuring out everything else before it.
The Governing Council decided to launch the asset purchase program, the APP, because it was facing a situation in which there was continued downside pressure on prices that were jeopardizing the achievement of the ECB's price stability objective. And at the same time, the room to cut the policy rate further down was very limited.
We expect that the APP, in conjunction with the other policy measures, will boost GDP by around 1.5% over a 3-year period and inflation by 0.5 percentage point in 2016 and 2017.
I don't know how clear was that, but why do we need an asset purchase program? Why do we need? And I don't know who is they, but in normal economic times, the ECB steers broader financial conditions and ultimately macroeconomic developments and inflation by setting the short-term key interest rates. But as a result of the global financial crisis, and this is in 2016, key interest rates have come close to their effective lower bound, the point at which lowering them for further would have little to no effect. So they started this APP to address that. Here is the explanation. How does the asset purchase program work? And it comes under 3 mechanisms. Under the expanded asset purchase program APP, the ECB bought a range of assets including government bonds, securities issued by the European supranational institutions, corporate bonds, asset-backed securities, and covered bonds at a pace ranging from 15 billion euro to 80 billion euro per month. Such asset purchasing influenced broader financial conditions and eventually economic growth and inflation through 3 main channels. And it's going to explain what are those channels. It is going to justify the APP. But if you think deeper, you will see that having the ECB purchasing these corporate bonds, supranational institution, asset-backed securities, and owning them would have major implications for the future as well. It is maybe solving a problem today, but definitely going to create further complications in future. That is something which requires, a real investigation. But here I was addressing the pandemic bonds, but the influence and the size of this 750 billion euro pandemic purchase plan by ECB was so huge that I decided to also include it in my video. So through 3 main channels: direct pass-through, and when the ECB buys private sector assets, the increased demand for these assets drives up their prices. This encourages banks to make more loans, which they can use to create and sell more asset-backed securities or covered bonds. The increased supply of loans tends to lower bank lending rates for companies and households, improving broader financing conditions. Their second channel is portfolio rebalancing, and then the signaling effect. Finally, asset purchase signal to the market that the central bank will keep key interest rates low for an extended period of time. This signaling effect reduces volatility and uncertainty in the market regarding future interest rate developments. This is important because it guides various investment decisions. Interest rates charged on long-term loans, for example, will remain lower as banks anticipate a protected period of low interest rates. So in the middle is the APP, and these are 3 mechanisms which is presented by the ECB as the reason to conducting this huge plan since 2014. Now, this is also interesting. From April 30th of April 2020, ECB pandemic bond purchases could run beyond 2020. The ECB's new pandemic emergency bond buying scheme could run beyond 2020, Chief Christine Lagarde said Thursday, describing the asset purchase as the best tool in the bank's battle against the coronavirus fallout. Yes, of course, to them, this is the best tool. The 750 billion euro pandemic emergency purchasing program, launched last month, might be extended further than the end of 2020. Depending on the length of the crisis, Lagarde told reporters in Frankfurt, "The best tool we have in our toolbox is indeed the PEPP," she added, vowing full flexibility to end the battered Eurozone economy. Now we have to ask that before the outbreak of coronavirus, how was the performance of your APP? That now you have added 750 billion euro to that. We will see in future. So, I hope that you have enjoyed this presentation. Maybe you have come to see this video just to understand what is a pandemic bond and is there something interesting about it or not. We just saw that the very entity that started it, means the World Bank, already decided to stop it, the Indonesia government as well, but in the United States, it is becoming a trend. The same is also applying to the ECB in a very big scope. So you can find the presentation file of this video, the PowerPoint file, in the description of this video. Thank you very much for your attention. I hope that you have enjoyed it, and please support my work just simply by subscribing to this channel and liking this video. Thank you very much.